Good evening, everybody. Today I'm doing a report on Walmart for 2/20/2018. Before we get started, let's just go over some basic information. Ticker is WMT and is primarily traded on the New York Stock Exchange. Current price is $94.11. 10-day moving average is 11.49 mil. 52-week high and low 68.61 cents to 109.98 cents. Next earnings date just happened yesterday, and the next one will be announced. Ex-dividend date 12/07/2017. Dividend amount 51 cents. Earnings per share $3.20. Price per earnings $29.39. Revenue 495,000 12 mil. Gross profit margin 25.56%. Net profit margin 2.45%. Return on equity 14.88%. All right. So what happened here when they reported earnings before the bell yesterday? Well, earnings weren't absolutely horrible, but they did have a sharp drop in their gross margins. And of course, what really has been pumping up the stock lately is its e-commerce potential growth, where they've been making all their online shopping and home delivery, and you can pick up groceries. They're trying to compete with Amazon. That's the main concept. They're trying to give competition to Amazon, and they actually bought, I believe, JetBlue in the third quarter, and they're trying to really vamp up this department to compete with them. So they had a sharp drop in their margin, slower e-commerce growth more than expected, and they had a bad holiday season, which kind of surprised me. But I mean, which retailer didn't have a bad season this last season, even though with the economy booming? But with it said, even though Walmart pulled down 10.18%, it's still up over 35.66% over the year. So right here, let's start by just looking at a weekly 4-year chart, where back in 2015 you could see this massive downtrend it had all year. It just went down all year, and then it recouped, or I believe 2016 in November had a nice uptrend, consolidation phase, and then ever since 2017 we have been skyrocketing in a huge uptrend, right? So I mean, you could see this right here. These two red candles right here was when 2 weeks ago, when we had that really bad market sell-off with volatility coming back, so everything was going down. So Walmart did, but you had that candle here that was its bounce right before earnings. Usually right before earnings you'll have a lot of option manipulation and price movement, and I mean, right here you had this nice run up into earnings, which usually when I see a run up into earnings, usually if they don't come out as good, or the earnings come out mediocre, you're going to have a gap down on price, and that's exactly what we saw. Besides, it had some issues that actually did worry investors. So that said, here's the 1-year chart just so you can see it better. Here's that run up down. So now what did I want to be watching now? After we had this gap down, I want to be careful and do not want it to break below 84.81. To me, that's really key for the uptrend to be continued. Usually Walmart trades within a $50 range, so it's not something that's going to be going bankrupt anytime soon, going under, or going to blast off to $200-300 a share. So with that said, usually it's a $50 range. So right now, where are we at? We're at 94.11. I believe for the rest of this week, because of options, I don't believe that it's going to break below 90 unless there's some massive selling that occurs. I think that it's going to try to hold this 90 range, but I would be careful. If it broke 91 or 90, watch out below, because then definitely we got to see if this uptrend can continue, because this could technically be its reversal for it. I just don't think it's going to move too much. So if the market's down 300 points tomorrow, then this might get pressure. There might be some selling pressure. I would not be a buyer here. If I'm a long-term investor, I might take some money off the table. As you can see, here's your 5-minute chart. We had that gap down from the open. Then you basically were kind of flat all day, and in the close you kind of went down a little bit, and you had a lot of sellers into the close. So when I see that, usually the next day, you're going to probably continue the movement down. Here's some option change so I could just show you what happened. Like I said, I want to watch this $91 level here, and then if for some reason it's tries to make a bounce tomorrow, this 95.50. Right here, I have this is the put side, this is the call side, and like I was just saying, calls got slaughtered, of course, down 10%. I mean, Walmart had its worst day since 1998. I mean, it's been over a decade. So we'll see what they do. It's just a lot of hope, and I mean, it's been on a killer rise, so that's why it came down so much. They're trying to give Amazon a run for their money, which, do not mess with Amazon. I've learned that personally. So I am giving a Wall Street investment rating of 3.5 stars out of 5. Still a good company. Still, it pays a dividend. You get something from it. Better than a checking savings account, in my opinion. I mean, more than opinion. Stable. It's just, it's a blah to me. You're in a $50 trading range. You could scalp, do smaller positions maybe, but I just believe you have better opportunity in other stocks and other retailers even to make a more aggressive gain. But like I said, Walmart's stable, so that's my explanation for my rating. So if you have any questions, you always can email me at wallstreetinvestment@gmail.com, and you guys have a good one.